Welcome to ForexTV.com's PM Exchange. It's Thursday, February 28th. I'm Remy Hoki. Today I'm joined by Joseph Trevisani, Chief Market Analyst at FX Solutions. Good afternoon, Joseph.
Hi, Remy. How are you?
Good, thanks. Great to have you on the show today.
Thank you.
Well, in today's session, we saw the U.S. dollar index fall to a record low for the second session.
Yes, it did.
And we also got comments out from Bernanke as well as from President Bush this morning. And we got continued deterioration in economic data.
Correct.
So let's start out broad. Given dollar weakness across the board, what do traders need to keep in mind going forward?
Well, you know, there are a lot of old market sayings. This one is probably never buck the Fed. I don't think it means the way it's being interpreted right now on the market. Generally, don't buck the Fed means when the Fed changes interest policy, go with it. They start tightening rates, watch out. If they start loosening rates, we'll end up with economic growth. That's the way it normally is. This time I would give a little paraphrase to it in that with Mr. Cohn, Donald Cohn, the vice chairman, and Ben Bernanke, the chairman, uttering their rather gloomy forecasts, that is what the market is taking from this. You have some deterioration yet in the American statistics, and in fact they do point down, but not dramatically. But if you have Cohn saying that they're worried about credit, and Mr. Bernanke saying that a few banks could fail, I mean not a lot, but a few, and he says nothing in defense of the dollar. In fact, when questioned about the dollar, the only thing he says basically is, well, it's pretty good for the trade deficit. And the economy, there is only one way to take this. So that's what traders have to watch out for. Mr. Bernanke's transparency is actually, in this case, I think, exacerbating dollar weakness rather than helping to curtail it.
Okay, Joseph, now that you've given us your take on recent fundamental data, let's shift our focus over to price action we've been seeing in euro dollar. In yesterday's session, the pair broke above 150 and today hit another record high right near the 152.30 level.
Right.
So looking ahead to tomorrow's session here in the U.S., we do have key data coming out, including Chicago PMI, U of M consumer sentiment, as well as personal income and spending. So ahead of the weekend, looking at Friday's session, what do you expect to see in the pair?
Well, I expect we're going to see Friday, my old favorite from my trading days, New York Friday. You have the euro in basically uncharted territory. You have statistics coming out tomorrow that are really secondary statistics, and they're really not going to alter the view. I don't think we're going to get a tremendously good number in any of those particular statistics. So you're not going to change the overall view. But you do have the euro making a tremendous run up against the dollar in 3 days before a weekend. This would seem to me that there might be some profit taking tomorrow.
Okay, and looking at the U.S. equity market here, we saw all the major indexes tumble almost 1% on the day. And we saw the U.S. dollar fall to a record low against the Swiss franc and weaken against the Japanese yen. And it isn't too long before the U.S. dollar might be considered a low-yielding currency. So for the dollar against the low-yielders of the Swiss franc and yen, what's the story there and where do you see it going?
Well, those currencies are just part of the general dollar weakness that we're seeing right here. I mean, you're seeing, some interesting divergences between the way the currencies are trading. The Aussie dollar is at like a 25-year high, but that is an internal Aussie factor having to do with the RBA and inflation. You're seeing the Kiwi, the New Zealand dollar, coming off rather hard, also internally. You're seeing the euro skyrocketing and being trailed, not very effectively, by the pound. So you're getting real divergences here, which offer traders some tremendous opportunities because you are not in one trend, and you can find things that you can actually work with.
Okay, you just mentioned the Aussie, so if you could give us your take on the high-yielding Aussie as well as the cable against the Japanese yen, and since we're on the yen crosses, also your forecast for euro yen.
Sure. The interesting thing about the yen crosses is that the euro is at an all-time high. The Aussie is at a 25-year high, which in our world classifies as an all-time high. Their crosses are trailing woefully behind that. They're not actually anywhere near the heights that they reached last year. This, I find, is very interesting because what you're seeing is again, the divergence between what the dollar and the euro are doing, which to me seems highly speculative, and the draining of some of the speculative urge out of those crosses. But As far as the U.S. dollar becoming a funding currency, I still don't see it.
Okay, Joseph, you touched on Aussie, and while we're on the so-called commodity currencies, I want to get your take on the Canadian dollar. I do want to mention that commodities have been soaring, and in today's session we saw both NYMEX crude oil and COMEX gold hit record highs.
Absolutely.
So for the Canadian dollar, what's your near-term outlook?
Canadian dollar is, even though it is often viewed as a commodity currency, or at least a proxy for petroleum products, it is also very closely tied to the United States. So it is sort of a balancing act for now. I think the Canadian strength and the dollar weakness is probably winning out. The commodity currencies in general are in a very interesting place, as are commodities worldwide. You have a bit of, again, more divergences here, which I find very interesting. Commodities rise and fall often in step with the business cycle. Of course, when businesses pick up, then commodity use rises and the prices rise. We are seeing now a potential split between that, a divergence off. There is so much new demand for commodities coming in from economies around the world that they are soaring and they are divorced from potential business cycles in the biggest economy, which is the United States.
Okay, well, last but not least, before we wrap it up, let's take a look at the rest of the world. There have been rumors of Gulf nations removing their dollar peg, and this does come on the heels of Greenspan's comments.
Right.
But what's your take on this currency reform talk?
I don't think they would remove a dollar peg until things were much quieter. Now is not the time for them, either for their own internal interests or for the worldwide interests, and I think they recognize this, to be changing a peg which would have, although in practical terms, not a lot of ramifications, at least not immediately, in psychological terms for the markets would have a very much more profound effect and a much larger effect than the simple fact that they're going to be moving to a basket of currencies. So I don't think they would do it. It would not be in their best interests.
Okay, Joseph, as always, thank you very much for coming on the show.
Remy, my pleasure. Thank you for having me.
Thank you. This has been your Forex News with Joseph Trevisani from FX Solutions. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks fell back sharply in today's session. The major indexes declined on the heels of weak data and Bernanke's comments on the economy. The Commerce Department reported that Q4 U.S. GDP came in at an unrevised annual rate of 0.6%, which was weaker than expected. The report showed falling employment, incomes, and industrial production in the final quarter of 2007. And the Labor Department reported that initial jobless claims climbed 19,000 in the latest week. It is at its highest level since the end of January of 2008. At the closing bell, the Dow Jones Industrial Average fell 112.10 points, or 0.88%, to close at 12,582.18. The tech-heavy NASDAQ fell 22.21 to close at 2,331.57. And the S&P 500 pulled back 12.34 points to end the session at 1367.68. Over in the fixed income market, U.S. Treasury prices rallied sharply after news reports showed the economy barely moved forward at the end of last year and as jobless claims rose in the latest week. The benchmark 10-year Treasury note climbed with its yield at 3.72%, down from 3.85% late yesterday. And the 2-year note rose with its yield down at 1.87% from 2% late in the previous session. The 30-year bond soared with its yield down at 4.56% from 4.66% late in the previous session. Taking a look at energy, NYMEX crude oil futures soared over 3% on the day to hit a new high of 102.74 a barrel. There was a broad rally across commodities today given U.S. dollar weakness against the majors. Also, geopolitical, inventory, and OPEC expectations ahead of its March 5th meeting supported crude oil prices. April crude ended the session up by $2.98 at 102.60 a barrel. In other energy futures, heating oil added 7.74 cents to end the session at $2.8485 a gallon. RBOB gas gained 1.73 cents to end the session at $2.4950 a gallon. Nat gas futures rallied, hitting $9.0498, the highest since February 1st of 2006. Nat gas finished up by 39.6 cents to close at $9.456 per million BTU. Prices are up 26% from a year ago. Over in the metals complex, COMEX gold futures ended up on the day hitting a record high of $974.80 an ounce after the close in electronic trading. April gold added $6.50 to close at $967.50 an ounce. In other metals, March silver gained 43 cents to end the session at $19.64 an ounce. March copper edged up 2 cents to close at $3.86 a pound. Now we're joined by Derek Fry from ONF Futures and Options. He'll weigh in on today's commodities rally and give us his strategies ahead of the weekend.
Recapping the action in the metal and energy sectors today, had a record-breaking day in both sectors, really. Crude oil pushed to and through 102, and gold pushed almost to 975 on the April contract, just shy. So really, the bottom line here is we are not necessarily advising anybody to short either of these markets, but we're also not advising anybody to chase these markets higher at the current levels. We do expect to see a pullback next week. We don't expect to see the pullback necessarily taking shape tomorrow immediately, but as we go through, one of the keys here is we're at the month end, and month end is, for a trader, a month is like a year and a week is like a quarter. That's how we break it down in our own minds for the most part, because our P&L is based on a monthly basis. We've seen a lot of weird activity in the last 3 trading days of each month over the last 5 months. If you look back, you'll notice every end of the month since October has been wild like this, and we expect that to kind of continue for the foreseeable future. But at the same token, like I said, we're not expecting this movement in the dollar, this fresh break to new lows in the dollar, to gain immediate momentum. In fact, we think you're going to see it basically be a head fake and pull back inside of the already established range that we just broke out of. So one of the key things that I would advise people not to do is hold long positions over this weekend in either gold or oil. I think that's a very dangerous prospect, so I would encourage people to either at least protect their positions if they're going to stay in with some tight stops over the weekend, if not outright get out. So just be very cautious at these extremely lofty levels. The CRB index has hit record highs, for over a week now successively. So be cautious with that. We're definitely near at least a near-term peak in this commodity cycle. So, like I said, be cautious with new buys, keep stops tight, and protect yourself over the weekend.
That was Derek Fry, head trader at ONF Futures and Options, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.